Good morning, everyone. Welcome to our Thursday morning trading room. Bear with me a moment here while I get the screen share going on. So, yesterday turned out to be pretty much a sideways trading day as we expected it would be. So the market doing a lot of this still gave us some nice opportunities. Looks like they fell off a little bit after the market closed, recovered through the overnight, and we're actually left with a little bit, or actually a fairly substantial opening gap. Looks like we opened here around 58.70 and closed yesterday down here around the 58.45, 58.50 area. Or maybe even a little bit lower than that, just eyeballing it here. Yeah, maybe even around 58.40. So a little bit of an upside gap. It does appear as though the market is in a little bit of a bullish mode here at the moment. These charts that I'm looking at here, of course, are the NASDAQ, for those of you new in the trading room. I'm also following the E-mini S&P and crude oil on my other chart, but please don't be shy about asking for a chart or asking questions. I will do my best to answer. Crude oil prices falling off a little bit. And looks like we're going to give it a little bit of an upside push here. I'm going to give them a few minutes to unfold, and I'll deal here first with David's question. David asks, Eric, is there a manual available for the Raptor telling me what is the meaning of many of the signals? Thanks. The new Raptor manual is a work in progress. That's part of the reason we spend so much time recording and uploading the daily videos as well, so that you have access to those. In short, there are three, on the new Raptor, there are three signals that you're going to be interested in. And I will review those signals for you right now. So if you want to make a note, everyone, of today's date, you'll be able to reference this video in the archives. The three main signals on the Raptor, the ones that are going to generate your Raptor prompts, are your trend change signal, which we call the cloud crossover signal. That's the #1 signal. The counter trend signal, which we call the soft edge sell, that's the #2 signal. Oh, look at that, right on cue. And then we've got the continuation signal, which is the hard edge bounce, and that's the #3 signal. Now, in hindsight, we probably should have reversed #2 and #3, because #1 and #3 are more related to each other. #1 being the trend change signal, #3 being the continuation signal. But at any rate, this is how they're laid out, so this is how we'll deal with them. Now, it just so happens that this morning's activity is practically textbook. Let's start with the #1 signal. The #1 signal, as I mentioned, is a trend change signal. It occurs when your clouds cross. So they cross first off, let's talk about the directionality of the clouds. This part of the cloud is what we call the soft edge. This line, or these lines, is what we call the hard edge. When the clouds are stacked with the soft edge below the hard edges, we are going to have a bearish bias. When the clouds are stacked with the soft edge above the hard edges, we're going to have a bullish bias. All right? So when the clouds go from a bearish bias and they cross over and now have a bullish bias, that's your cloud crossover signal. The cloud crossover signal requires first the clouds to cross, but there is also a pullback component to it. So when the clouds cross, you're going to look for a pullback, and then the clouds are going to support the new direction. Once that happens and all the signal parameters have been met, you will print a number one signal. So simply for the clouds to cross with no pullback, you will not generate a number one signal. Sometimes, if the crossover seems imminent, I will look at what I refer to as an early cloud crossover. This signal right here would qualify for that. So you can see the clouds, again, have gone from a bearish state. Now they're trying to get bullish. Most of the clouds have crossed. I've got the pullback, and then it comes out and produces a signal. This is one of these visual signals that is perhaps a more advanced signal. It's more advanced because not all your ducks are in a row at this point, right? When this signal is printing, your clouds have not crossed. So it's more, like I say, it's a little bit more of an advanced signal, and I don't want to distract you with the advanced signals, but if we're going to take the time and go through the signals, I will mention it at this point. Is this a valid signal? Well, yes, it is. Is it a high probability signal? Not as high a probability signal as this one. Now, as it happens, both signals worked out. However, if I had to choose between the two signals, this signal here, this second one, this is your better signal of the two. Because at this point, your clouds have fully crossed. You have a nice pullback into the cloud. The market comes back out. We produce a buy signal. And then from there, we get a very nice progression. People often ask about these secondary signals. And they are exactly that. They are signals where the signal parameters have been met. So the Raptor is going to produce a signal, but it's not as high a probability signal as when the signal prompts print. Very similar to this early cloud crossover that I pointed out. Can you take these signals? Yes, of course you can. But bear in mind, they're not as high a probability trade. So if you choose to take this signal here, you may end up having to run a very, very deep stop, or probably at least here to the hard edge, to make sure that you can ride out any kind of pullback, because it is not a high probability signal. All right, so there's your number one signal. The clouds change direction, they cross over, you get a pullback, the market comes out, if conditions are right, and produces a buy signal. That's your number one signal. The number two signal is your counter trend signal. Intuitively, you should know that in order to have a counter trend signal, you must first have a trend preceding it. Let's see if I can find an example here from yesterday. If your chart looks like this, there is no trend. So if you start producing counter trend signals, well, the conditions may have technically been met. There is no trend to reverse. All right, so that's the first thing you need to bear in mind. Don't ignore everything on the left side of your chart. In order to produce a counter trend signal, you must first have a trend. That's condition number one. Condition number two is that you must have a test of the extreme. Now, I've spoken about this before, but basically a test of the extreme is the market showing you that it can no longer continue the trend. Most tests of the extreme are going to come up short. So in an uptrend, they're going to look like this. In a downtrend, they're going to look like this. This is where we get the M and W formations that you hear about, or some people will call these 1, 2, 3 tops and 1, 2, 3 bottoms. Or if we throw another peak here before it, traders will call it a head and shoulders or an inverse head and shoulders pattern. The principle remains the same, namely that we have a trend that can no longer continue, and that's evidenced by this right here, where the market tries to resume the trend, it can't, it goes the other way. At this point, you're going to produce your number 2 counter trend signal. Occasionally, the market will, rather than coming up short, occasionally the market will breach the previous high or previous low by a couple of ticks and then reverse. This does not negate the number 2 signal. It still shows you a market that is trying to regain a trend and failing. Okay, that's the part you need to keep in mind. That's the whole point of a number 2 signal. The market trying to regain the original trend, but it cannot do so. This morning, we have a trend. We have the market trying to recover the trend, and all of a sudden we print a number 2 signal. That's the Raptor saying to you, hey, wake up. The market can no longer maintain the uptrend. I'm reading all kinds of bullish forces here. Get ready to sell. So when you produce a number 2 signal, our first target is the hard edge, but you can see here this morning we've actually gone quite a bit further than that. That's your number 2 signal. Your number 3 signal, I gotta go back here a little bit, we gotta find it. Okay, here's a good example again of just looking to the left of your chart. We got a great big sideways mess here. Your number 3 signal is a continuation signal. What are we continuing here? Is there a trend here? I think not. So no trend to continue. All right, I guess we'll have to go with this one here. The number 3 signal is a continuation signal, as I mentioned. It is called the hard edge bounce because when you have a trend, somewhere through the trend, the market's going to try to pull back. It can be a pullback due to profit taking. It can be a pullback due to aggressive sell. In this case, aggressive selling. It really doesn't matter. The market will pull back. It will pull back to the hard edge. Whenever you encounter the hard edge on the Raptor, you should anticipate a reaction. That's just how it works. Will you always get a reaction? No. Sometimes the market will slip right on through, as it did this morning, and I'll show you that again in a minute. But right now, you should anticipate a reaction. So when the market comes down, hits the hard edge, comes out, and all the programming parameters have been met, you will produce a number 3 signal. So just like the other tools, there are 2 pieces to the number 3 signal. Piece number 1, you need to have a trend. It can't be a continuation signal if there is no trend to continue, right? It has to at least resemble a trend. And there might be a little bit of judgment call in it, but if it looks like a trend, it is a trend. All right, simple as that. That's part number 1. Part number 2, you encounter the hard edge, and the market comes out and produces a signal. That is your number 3 signal. Now, there's also a variation of the number 3 signal, which is what we call the double pullback. Unfortunately, this was going to be the number 4 signal, but it was just too difficult to program because there were too many variables. So it's one that you're going to need to spot visually. It's not difficult. As the name suggests, you get 2 pullbacks to the hard edge, and you come out and you produce buy signals. Well, in this case, buy signals, because we have a bullish band. All right? That is what we refer to as a double pullback. Even if you don't remember that, you see the Raptor still prompts you twice here to buy. The double pullback tends to be a very reliable signal, which is why I bring it to your attention. And that's it. Those are the 3 Raptor signals for you to know. And we've always got the prompts to help you, but I guess the important thing to keep in mind is don't ignore the left side of your chart. And remember that every Raptor signal has 2 parts to it. If you meet those 2 criteria, then you're ready to set up a trade. And after that, well, it's a matter of, okay, here I've got a number 1 signal. Do I take the signal? Well, yes, if I can afford the trade, I take the signal. So right now, the direction, not so much the issue as where am I going to cover this thing? Right? There's not a whole lot of structure for me. This is the problem, or not so much a problem, but the issue I would have with this signal. It's not, is the signal any good? No, the signal's good for sure. My issue right now is where can I cover the trade that my stop's not going to get hit, right? Because there's not a lot of structure here. Ideally, I would love to cover it up there, but I know that won't work. Maybe I can cover above the primary resistance. That's kind of halfways. Nope, can't afford that. So now it's an issue of, do I dare run a tighter stop, maybe to the hard edge, or do I pass on the trade? See, now it becomes a matter of logistics, not do I take the trade or don't I take the trade. Is it, do I take the trade? Yes. You have a high probability signal. Can I afford to take the trade? Maybe. All right, so that's how that works out. You can see the market would have fallen off and found your high probability signal. So there, in a nutshell, is your How to Trade the Raptor video. I should maybe just cut that out of the recording and post that up, because really, folks, that's it right there. There's no more mystery to it than that. Again, all these secondary signals, can you take those? Well, they tell you the signal parameters have been met. Is it a high probability signal? No. You know, it's like this last signal that developed here. You can see we got some yellow bars starting to creep in. This would have been a lot more sideways on the hawk. It would have looked a lot worse. Oh, maybe not. Maybe not so much worse on the hawk. But these yellow bars show neutrality, right? So you get a cluster of yellow bars, and all of a sudden you come back with a buy signal. Again, this is one of these advanced style signals where you might say, yeah, all right, I'll give it a go. For $300, that's not going to ruin me. I'll give it a shot. And all of a sudden the market comes back and reverses on you. Well, now, you know, you've got to scramble to do something with the trade. Whereas if you hold out for the high probability signals, then you can say, oh, well, I've got a high probability short. I need to cover above the high, and away we go. Oh, I have another high probability signal. Do I take it? Yeah. Where can I cover the trade? All right, I can only afford to cover it here, and away I go. So that's trading in a nutshell. David, good question. David says, is each day in the room recorded like now? Yes, every day is recorded, and you can find all the recordings. I will show you here. If you go to YouTube and you search Indicator Warehouse, you can subscribe to the Indicator Warehouse channel, and every day's video will be posted. It takes an hour or two to get everything uploaded. But if you're subscribed, you'll receive notifications of it. But just make a note of today's date, and you can reference it as you need. All right? And if you have screen recording software, you can capture that little 15-minute segment and save it. I will do a proper one, but like I said before, you can ask me as many times as you like. I don't get upset easily. I don't mind repeating myself if you didn't catch something. So please don't hesitate. Natalia. Good morning, Natalia. She says, are you trading, Eric, are you just trading just the New York session or after market close as well? What is your favorite time to trade? My favorite time to trade is the morning session, the first hour, and certainly the first hour and a half of the day. Those tend to be the most productive. I think you should always trade native to the time zone of the market you're trading. So for instance, here we're trading the NASDAQ. So these are trading North American markets, so you're going to want to trade the North American Open. If I was trading the British pound or the euro, I would focus more on the London Open and the European session. You can still trade the British pound and the euro during the North American session, but after the first hour, things will be shutting down in Europe. So after the first hour in North America, things are going to be ending in Europe, and you're not going to get very valid signals. If you're looking for something to trade around the clock, anytime, day or night, crude oil has been surprisingly active in the overnight session, more so than even the North American session. Here's the crude oil chart on the Raptor. Well, yesterday was a bit of a dud, but a lot of times you'll see here's the European session. No, actually that's a bit of a dud too, sorry. That one's a dud too. Okay, I take that back. Crude oil used to be a better market to trade in the overnight or 24 hours. Right now, I don't know what's up with crude oil, but it's not nearly the market it was even 6 months ago. Gold, however, is still a very good 24-hour market. So if you're home at night, you're bored, you want to trade something, go check out the gold market. If you're living, say, in Australia or in that particular Asian time zone, you might consider the Hang Seng, the Nikkei, the Japanese yen during what would be your day, your morning. The Aussie dollar, of course, is pretty good as well. The euro dollar would still be fairly active at that time zone also. Yeah, way to go, David. You got the right idea. David says, thanks, I'm going to be a gazillionaire now. That's terrific. I'm glad I could help. All right, well, it looks like I might have missed the move du jour, as we had a very significant move lower. For those of you trading the European time zones, or if you're in North America and you just can't sleep, I've always found the CAC 40, which is the French stock market, to be a pretty good index to trade. The Stocks 50 is also a good one. That's the German one. It's the German Dow. Getting a little bit of a counter trend signal here. Dare I try to step in front of this freight train of a market? So when you're taking, sometimes when you're taking some of these counter trend signals and you've obviously got a downtrending market, you may want to take advantage of the second push entry opportunity. And all the second push entry means is we allow the signal to engage, and normally, I don't know why, but a lot of times when that signal engages, it flinches. It's just the nature of the market, I suppose. Just looking at these other signals to see, but it happens a lot. You'll get the signal, it will flinch a little bit, but the good news is it has now shown you the short-term limit of the market. So this is a second push entry opportunity. We're looking to buy in, but only if the market can take out that very short-term swing right there. And like I said, this is like stepping in front of a bus or playing chicken with a bus, because this is a very, very strong trend. You should not be too aggressive on the upside here. In fact, I would much prefer a number 3 signal, a hard edge bounce. That would be a continuation signal. I could probably get behind that a little better. All right, so I'm going to scratch this. Now, you know how I pointed out the number 3 signal to you, and I told you there's two components. There's the trend continuation, or you need a trend, and you want it to intersect the hard edge. Well, sometimes it's going to get very close to the hard edge without actually touching the hard edge. You won't print a prompt as you see, but you may deem that to still be a number 3 signal. This is what you may classify as one of those slightly advanced signals again, where you may look at your chart and you may say, man, that's close to the hard edge. I may give that one a go. I might consider that to be a hard edge bounce. And so that's what I'm trying for here. I'm looking at that and saying, is that close enough to be a hard edge bounce? I think it might be. Okay, so you see we're getting the prompt now. We're producing another counter trend signal. We've had the test of the extreme right down here. We're trying to push the market up. Is it a high probability signal? Yes, it is. I'm already short, of course, so I'm not looking to take it. You may want to, for a couple of ticks, you may want to enter above this high here. All right, so we're back into the hard edge now. And if we come out of this hard edge now, we will produce a number 3 signal. That could be considered our double pullback, right? This signal here would be the first pullback. The second signal would be the second pullback. All right, so here we come. Off the hard edge. Oh, another yellow bar. That's not what I wanted to see just yet. Yellow bars, of course, showing neutrality. There we go. Get on down there. There we go. So this number 3 signal, as I mentioned, could be considered a double pullback signal, which does tend to be a high probability signal, and hopefully we're going to see the market continue lower from there. Hooray, hooray for me. Yeah, I know. I'm thinking, in hindsight, this may have been one to hold on to a little longer. As I mentioned, the market just in a full free fall today. So, you know, when you're looking at your signals, this number 2 signal, you may say, oh, well, that number 2 signal failed. Well, maybe not. It was still a high probability signal. The market, the Raptors spotted something that suggested the market is ready to reverse. Like I said, taking the signal is only one part of the trading equation. The other part of the trading equation is, where do I risk it? Now, this is where context becomes very important. You know, you have to be able to look back on the left side of your chart and try to gauge what type of signal this is. You just don't take the signal and put your stop right there. That's not how it works, right? You've got to look at what's going on here and say, yeah, okay, this is a really, really strong downtrend. I'm going to have to run a relatively deep stop. Maybe I'll run my stop down here somewhere. Oops. And Trade Manager says, no, sorry, Eric, you can't afford that. All right, what if I try to run it right here? Nope, still can't do that. All right, this may be a trade that I have to sit out of if I can't afford it. Okay, so the market comes down. It may well reverse here and still hit your profit objective if you can hold on long enough. So it's not that the number 2 signal wasn't valid. It may have been a little early. When in doubt, if there's an obvious trend, just stay with the trend. Working a possible late filter entry signal here. Got a macro pullback / possible 4-arrow consolidation building here in the hawk as well. Are we an hour in? No, we're not. Man, that was a busy half hour. A lot of times, when the market's been going one direction for a long time, you can't help but think, oh, there's going to be a pullback. Avoid that temptation. So here's, again, one of these secondary signals. Do I take it? Well, it doesn't qualify as a high probability signal, but we have a very strong downtrend, so maybe I'll give it a shot. Right? We always want to, so long as we can afford the trade, it's usually okay to take it. If you can find 2 reasons for taking a trade, you'll probably be all right. What would my 2 reasons be for that signal? Well, the very, very strong downtrend, and of course that the Raptor produced a signal. Almost halfway toward a hard edge bounce. All right, so as many of you have probably guessed, this would be an early number 2 signal. We see a market that's struggling to hold on to the downtrend, unable to do so, and so we've come back with a buy signal. That would be an early number 2. It hasn't met all the parameters, which is why we haven't printed a number 2. But it is still an early buy signal. I suppose you could do a second push on this one, so you could handle the trade this way. Again, you need to cover it at least below the lows. And our target is the hard edge of the Raptor band. Come on, get up there. Oh, getting a little bit of a reaction here now off the primary support line, and maybe an early reaction to the hard edge. We'll try to hang on here a little bit longer. On the next push up, I'll even bring my break even in a little tighter. And take my stop to break even. Now I don't need to worry about it. Hopefully they'll press on through. Go buyers, go buyers. Come on, get up there. Pretty sure it should hit my profit objective. It's just a question of whether I rolled my stop too early. There we go. Come on, get up there. Geiger counter's pulling over to the buy side, or was pulling over to the buy side. Aye, come on. Nope, wouldn't let me out. That's okay. It is a counter trend trade, right? So you don't want to get too cute with it. Counter trend trades, by definition, are always going to be riskier than your with trend trades. Okay, here comes the second push now. It looks like they're going to give it a go. Might as well stay here with the Raptor this morning. We've got a few, obviously a few Raptor traders in the room right now. All right, so you can see if I wasn't quite as quick with my stop, the market now drifting up to the hard edge. Okay, and once we hit the hard edge, we're going to look for a reaction. Hmm. All right, so we're not getting a selling bias right now. It's actually starting to look a little bit more bullish. So what we would anticipate is maybe a cloud crossover building. Now we're a long ways from a cloud crossover, of course, but once you know what to expect or what you might anticipate, and the hawk actually gave us some earlier trend change signals here. We got the first micro macro cross, the macro pullback slash 4-arrow consolidation. Falcon also producing a trend change signal early. Raptor not quite in sync yet. I have a feeling that with that big move lower, right out of the open, even though we're seeing a little bit of a pullback here, we're going to end up in a little bit of a sideways range for the rest of the day. I think that was the move of the day, and we should probably not get too aggressive on the buy side. sort of on cue for a reversal, though. It actually happened a little bit earlier. We're about an hour into the trading day, and this tends to be when the market will make a reversal against the dominant trend if there was one. Well, we're just kind of watching and waiting now. Ooh, that's a bigger pushback from the buyers than I thought. Okay, so here is an instance where we would have an early cloud crossover signal. I didn't point that out because honestly I thought we were going to get one more push slower. But you can see it developing, right? The clouds are beginning to cross. They're not fully crossed, which is why we did not print a number one signal. However, it qualifies as an early cloud crossover because we're getting some of the components, right? We've got the clouds changing direction, we have a pullback, and we have a signal. That's an early cloud crossover. Now that it has made the clouds aren't fully crossed, the next pullback, providing it's deep enough, will also produce a number one signal. That will be the proper cloud crossover. And after that, it becomes again a matter of logistics. Can we afford the trade? Wow. Oh, I'm sorry, David. I missed your comment. David was asking, what does the red vertical line forming now mean? Well, if it's a red vertical line, and actually here, let me show you this while we're in between signals. If you go to your indicator window, right-click on your screen, go to Indicators, and if you go down to your Raptor, go down to the very bottom, the background opacity, you can make this a little bit darker. And what that will do is it will make these signals stand out a little bit more. You see, when a signal prints, it also prints this line behind it. So this is helpful as well when a lot of times when a signal is forming, before the signal is even complete, you're going to get the pre-signal warning printing up here. But if you happen not to see that, and if you don't have your audio alerts turned on, or you have your speakers turned down or whatever, it will still start to print a red or green line. Again, that alerts you to the possibility of a high probability trade. So I'm not exactly sure, David, you printed that 725, so it was right around here. It shouldn't have been a red line, but at any rate, that's what, if you're seeing a red vertical line like this, that's what that is. If you're talking about this line that's enveloping the bar, that's part of the Geiger counter. This tells you your short-term bias via the Geiger counter. So right now the Geiger counter is reading more bids than asks. There's more on the sell side than there is on the buy side. There's more selling going on. Yeah, if you don't have the Geiger counter, you won't get that printing. And again, it shows you short-term bias. right, so now we're waiting on that pullback to the hard edge or something resembling a pullback. You can see we're already producing a warning dot. If this does develop into a buy signal, we're going to get a number one signal printing at this point. Okay, we're still waiting. It's going to take a little while here. We've got a market that's fairly balanced at this point. You know, we had the big, I'll show you here on the Eagle. We had the big move down, and now we've recovered at least half of that move. So all the Fibonacci traders are going to be going nuts trying to sell the market short. And we'll probably see at least a short-term move down. I don't know if we're going to get another serious signal here this morning, though, as we get closer to the lunch hour. So you see, when you know what to anticipate, then we can, you don't end up chasing other signals. You can actually hold out for the better signals. Francisco, you're not the only one to make this comment. Francisco says, I'd like to see these number signals in the DTS strategies as well. Adam is the fellow you want to make aware of that. He's the guy who can make that sort of thing happen. So if you ever have, you know, ideas or concerns or something that you need, don't hesitate to contact Adam. He really does appreciate hearing from you. That's actually how the Geiger counter got developed. Is one of our DTS owners said, I need a tool to help me decide when it's time to get it out of the market. I need a tool to help me see when the market momentum is shifting. And that was the impetus behind developing the Geiger counter. All right, well, something sparked the market a little bit. Getting a big sell-off, and we've moved back to the hard edge. So now we're waiting for our number one signal to print. We're waiting for the buyers to come back. Clouds fully crossed at this point. The trouble I'm going to have here again is not so much maybe the direction, but covering the trade. The proper stop really needs to be down here. And I know that's going to be really tough. And we're kind of running out of time, you know. As we get deeper into the morning session, things are going to get a little bit dicey as well. As they get closer to the lunch hour, the market will start to drift a little bit sideways. So if you do produce a buy signal here and you choose to take it, you may want to look at just taking a scalp profit target, not a full swing profit. Excuse me. right, so waiting on that number one signal. Here on the hawk, we've actually got a couple of signals. We've got the red bar buy, which tends to develop near the end of the trend. So if you're kind of looking at all your tools together, the hawk is actually starting to look a little bit bearish just by giving us this counter trend signal right here. Now, the red bar buy is a signal that you can take with trend, so we could actually buy it. We could have bought it up, in which case we just hit our profit objective. Or you can also look to short it on a failure. Now, again, counter trend moves, I'm probably not going to go in for the full amount here. It's just a little bit too risky. But the possibility is there if the market starts to turn over a little bit. And all right, boys and girls, I got to button up shop here a little bit early. The phone call, I guess, was kind of important, so all right. No, my wife just came back into the office and said, no, I'm good for a little while yet, so. A friend called having a crisis. Isn't that always the way? All right, so here's that number one signal that we were waiting on. So we're into the hard edge, we're bouncing out, producing a buy signal. You know, again, because I may have to cover this trade really, really deep. So there's my signal. It may be out of reach. So in that case, I may choose to take a second push entry. Right, so I let the signal engage, I allow it to flinch. That will enable me to perhaps cover the trade a little bit tighter because I'm not going to be brought in unless there's a renewed push to the upside. All right, that's a little bit safer. And we'll see whether the buyers can get it together here and rally the market. Okay, there they go. Let's go hard. Let's take the break even to that high. Oh, don't stop now. All right, I'm going to manually take this trade to break even. Again, it's just the time of the day. It's kind of the condition of the market. I do have a scalper's profit in here. I could just scalp out, but we'll see whether I can get a little bit extra out of this. Get away from there. Stinkers. All right. Well, there we go. We're probably going to see the market try to pull back if it gets back here. right, if we get a failure now, that will produce another number 2 signal, and that could be worthwhile shorting because we could see the market try to fall off back here to the lows. All right, I'm sorry. I've got a few things at me right now. I've got Adam at me, and I've got my friend at me, so I'm going to have to button up the room. I will see you again Friday morning. Be careful. The rest of the session could be a little bit sideways, but a move lower, not out of the question, and maybe even a retest to these highs at 58.52. Talk to you tomorrow. Bye for now.